Welcome back to another weekly Forex forecast, traders. As always, we will start with the US dollar, the most important market to be looking at. So the last couple weeks, we have been pointing out this weekly demand zone down here. I did point out this one a couple weeks ago as well, but this one we've been pointing out, and we are reacting off of this weekly demand right now. More importantly, this weekly demand zone from all the way back here, it's like inside of a monthly zone. And if you look on the screen now, you can see this is the 3-month chart of the DXY. We are clearly contacting a 3-month demand zone that is in control right now. And we have a great 3-month trend to the upside. So the macro charts are telling us that, in my opinion, this demand should hold, and we are expecting price to maybe even rally all the way up to 103. I'm not saying, that's going to happen for sure. We'll have to monitor the lower time frames, but right now, we have higher time frame zones in control. In my opinion, that's why we saw the move from the dollar from here to here. That's why I think we are going to continue to see the move up on the DXY. Now, on the daily time frame, we clearly removed this downward trend line. It kind of looked like some sort of fake out. We will get this a lot around trend lines. When we break a trend line, you will see some sort of manipulation as we push price down and kind of test the trend line again. I don't trade trend lines. I just track them to look at trend. Right now, this is a sideways market, but obviously, in order for a weekly demand to hold, we have to lose trend on the daily. That's why the removal of this daily trend is definitely a bullish sign. It's not the most bullish sign ever, but it is definitely a bullish sign. Over on the 4-hour time frame, we have clearly, lost momentum here, and we had a nice trend to the upside, nice momentum, clearly lost. This is going sideways right now. I really don't know what to be doing based off of this chart. I think if we do break below here, we do have a demand zone sitting right below at 96.82. I think we could see a move off of it. It's a little bit tricky right now. What we want to be monitoring for next week is pretty much this 1-hour chart. This 1-hour downward trend line was clearly removed. This is not a 1-hour trend to the upside. This is just momentum. What I want to see next week is a clear low and a clear break above that high, giving us a nice trend line. A trend line is much different than quick momentum like this. Quick momentum like this is very easy to break. However, a trend line with clear peaks and valleys is a little bit harder to break. Just like we had here, this trend line held for a while. That's what we were looking for to really give us that bullish sign on the dollar. So for now, it is tricky, but as far as the next couple weeks go, as long as this weekly demand's in control, guys, I am going to remain bullish on the dollar. Now, it does not mean we can only look for longs on the dollar. I'm going to be pointing out both longs and short trades on the dollar throughout this weekly forecast, so make sure you stay tuned. Already on the forecast for the Euro US dollar on the weekly time frame here, clear weekly trend to the upside. Yes, we maybe we're quote unquote due for a pullback, but just want to point out the trends are clearly to the upside here. Unlike the DXY, usually the dollar and the DXY, or the euro and the DXY are completely opposite. But however, on this chart, this trend line is actually holding on the daily time frame, which is pretty significant. It could definitely be a sign. It looks like we are pulling back into the supply again for a second touch. We already got the move off of the supply zone. I've had this supply on my chart since it was formed back in 2021. I've been doing this for quite a while, guys. So I like to see these old zones kind of work out like that. And the supply held here. It looks like we're going back up for a second test, but more importantly, that trend line is being respected right now. So it definitely could signal more strength to come in the euro. But again, I have to go off the DXY and expect the dollar to continue to rise, which would mean we could definitely see a break of this trend line over on the daily time frame. Now on the 1-hour chart, there's really not a whole lot going on right now. However, sitting below, we have a couple decent 1-hour zones. This one's tested down here, but we have 2 fresh zones, and I think they're decent for maybe, again, if the dollar weekly demand continues to hold, we definitely aren't going to expect a long trade in the euro to give us a 5-to-1, 6-to-1 trade, right? It's just not simply going to do that if the dollar continues to get strong. So these demand zones, how I view these zones basically is they could be good for a quick 1-to-1 or a 2-to-1 trade, or whatever you want to do. Just be, if maybe you want to look for a 5-to-1, that's fine. Just be aggressive with your profit taking, meaning when price hits your zone and we get a little bit of a spike up, maybe move your stop loss to half risk or to break even. Because again, if our price is pushing down, it means that the dollar weekly demand is in control. So you're trading a long trade against a dollar supply zone. Very, very not the best situation. So that's why you want to treat it basically saying I'm going to be aggressive with my trade management. And then also, if we get that removed, that's going to be important as well, because any supply zone that removes it is going to be our bread and butter setup where we can get that larger risk to reward trade, again, if the dollar holds that weekly area of demand. So at the end of the day, This is a 1 hour zone on the euro. And again, if you don't feel comfortable, just an entry and a stop loss below, that's completely fine. You could also look for some sort of confirmation trade. Now on the 4 hour chart here, something interesting took place. We actually pushed into this supply zone on the euro, and basically what that told us, it was a time to look for euro shorts. Now, not really any trades on here because this zone was already pretty much tested, kind of sketchy, but we did catch a nice trade on the EURUSD over 3-to-1 hit very easily as price contacted this supply on the euro time frame. And that was a trade that was called out in the daily market breakdown video for all of the Diamond members. If you want to trade alongside myself and the community, join the Diamond membership for exclusive access to our daily market breakdown videos and catch trades like these. Plus, dive deep with our full-length forecast covering 26 plus markets, our interactive Sunday Zoom sessions, and personal homework to sharpen your strategy. And you'll also join our private Discord group for direct access to me and unlock a complete library of A to Z video lessons to master supply and demand trading. Don't miss out. Let's level up your trading. Links are in the description down below. So this trade has already played out. At this point, we want to see what takes place after the zone. So if we break this supply zone, any demand zone is going to be very, very significant. And why is it going to be significant? Well, the reason is because we not only got a trade off of it before, we reacted off of it again. So clearly there's some sort of institutional selling and supply up there. So that means if that breaks, any demand zone that breaks it, it's going to be pretty significant. And it could prove to us that the dollar is actually going to continue to rally to the upside. So that's why we want to monitor what is taking place off this supply zone. And look, if I don't like trading at tested zones, however, I cannot deny the strength of the supply, and we definitely could continue to see more bearish price action, especially since we were bullish on the DXY. So if you were a day trader, I think 15-minute time frame shorts are good as long as this supply zone is being respected, which it does look like it is going to be. However, it's a little bit tricky right now. So again, guys, any questions at all about any of my forecasts or analysis, do not hesitate to leave a comment down below. I respond to every single comment. Alrighty, on to the forecast for gold. Beautiful weekly demand sitting down below. I've been pointing it out for so long now, pretty much since the start of the year when it was formed. At 30.93, I think it's a great dip buying opportunity. If you are not invested in physical gold or gold stocks, whatever, this is going to make a great dip buying investment opportunity. And I do think we could be pulling back down to there. And I cannot wait to see the headlines when gold pulls back down here. If it does, oh, gold's terrible, gold's awful, buy Bitcoin. It's going to make a great dip buying opportunity. I've been doing the same thing all the way down here. If you go back and watch some of my old videos, I'm sure I was pointing out this exact zone. I've literally bought that zone down there, and I'm not trying to say it for, oh, look at me. I'm just telling you, when you guys pay attention, and then all the headlines down here were absolutely saying gold is absolutely terrible too. So just funny how that works out. But look, I think it's a great dipping opportunity on gold. See if we can get there. As far as trading it goes, I mean, this trend line is clearly holding right now. I've been talking about this for a while now. It looks like we're going to be pinching out in this pattern here. Somebody told me and left a comment. They told me what this is. It's like a ascending triangle or something. I don't know. We could definitely push the upward end of it there and break out to the upside. But right now, it looks like we might be breaking below it. But we've already seen this multiple times where we kind of pierce below it many times and we continue to rally up. So that's kind of what I'm expecting to see, a continue of that move up. Now, on the 4-hour chart, we have a trend line holding here as well. We did get a little overextended here, but we pushed back into it, and to me, it's still holding. And I mean, look at this. Clearly testing it right now. Clearly, there's some sort of manipulation going on right now. And this trend line, to me, is still being respected. So if we push out and continue to respect this trend line, longs on a 15-minute time frame are going to be completely fine and definitely tradable to potentially get a trade to push to that potential all-time highs. We'll have to see what takes place this next week. I think it's possible we do get to all-time highs this week, especially if that trend line continues up. Now, over on the 1-hour chart, we have a kind of an interesting chart. We did remove some demand here. It was a decent demand. It was a tricky one where I wanted to draw both. So I did draw the one that's a little bit better down below. We have a supply zone that's about to come in control at 33.40. So if you're bearish, I think we maybe could see a quick move off the supply to trade down to that demand. And again, since the higher time frame trends are up, we prefer to get in long, guys. It doesn't mean we cannot take a short at this. It just means don't expect price to tank. But getting long on gold, we're sitting near all-time highs. The trends are up. You could expect to get a larger risk reward trade out of a long zone rather than a supply zone. So We have a couple options here on gold. If you're bearish, this is our supply zone short, and I would maybe be looking to take profit around this area of 1 hour demand. If you are bullish, we have two options. We could be looking for a couple options. We could be looking for longs at this demand zone to see a potential pullback entry. That is option 1. Option 2 is waiting for this supply zone to be removed, and any demand zone there is going to represent a good area of demand for potential long trade. We also have an older 1 hour zone from back here. It's kind of old. I don't love that. The only reason I'm saying this is a decent zone is because it removed a trend line, a significant trend, and the fact that this might act as a support liquidity trap here, because this is a very, very clear low. And if you look, we kind of already did it from back here as well a little bit. So if we can get some sort of reaction off the zone and create this support trap again, I think this is going to be a great dip buying opportunity at 3,300. But again, it's so old, right, that I want to see it prove there's liquidity here by multiple touches to really give me confidence in that trading setup. So I think that one could be rewarding. Those are our options for longs. And then let's say we push all the way up to here this week. That's fine. I wouldn't mind that at all. We have a nice supply zone sitting above at 3410. This was kind of a key zone that removed a demand zone and a trend line. So it's a very, very key area. I am definitely expecting to see a move off this supply. But again, it's counter trend. So any short trades like this, you're going to have to be aggressive with your trade management, and that's fine. But we could catch a small move off the zone. But more importantly, I want to see what removes this zone. That's going to be a great dip buying opportunity if we can push up there on gold. Alrighty, on to the forecast for the USDJPY on the weekly time frame. Clear area of support reacting multiple times. And with the dollar weekly demand and control, we could expect price to rally up. However, if we do see the dollar start to weaken again, I think we will clearly be targeting this liquidity and seeing a move like this. It's obviously that's a far ways away. I just want to point that out. We have seen the USDJPY rally to the downside here the last couple weeks, and why? Well, if you look, a supply zone was sitting right above. Depending on how you drew it, we can change it just to be safe like that. I don't like doing that, but this is more to just be safe. I'm not saying we took a trade off this. I'm only saying I'm adjusting the zone just to play it safe and say that the zone has been tested. But what this is a clear area of supply sitting right above a clear resistance area. What this is a liquidity trap. This is something we discuss in the 38-page full course supply and demand trading PDF. As you can see on the screen right now, this is an odds booster when there's a clear area of support resistance before the zone. So just a quick little lesson here on this. This increases our odds of the trades to work out, in my opinion. Whenever this takes place on the price chart and there's a nice supply zone above, it's a pretty high odds situation, and that is, in my opinion, why we are seeing a move to the downside. And that full course PDF does come with the membership as well. So as far as trading the USDJPY goes now, it's kind of tricky. I mean, we have a 4-hour supply sitting above. This 4-hour supply, it's very old. It was created back in April. I don't love just trading a super old zone like this. The only reason I don't mind this zone is because it's sitting inside of that overall daily supply. So if we were to just, let's go ahead and make this black just for the sake of the video, and we're going to go ahead and sync in the layout. Now let's see on this 4-hour zone, let's see where that 4-hour zone is located on our higher time frame. If you look, it's actually sitting kind of at the high end of this supply zone on the daily chart. So what this is our top-down analysis, our multiple time frame analysis that we use in our trading. It's why supply and demand is so powerful. That's why I think we could see a move off of that 4-hour supply zone, although it's a very old zone. Let me switch this back to red. It's a very old zone. So, but again, it's inside of that overall daily area of supply, which makes it higher odds. Not only that, we have a clear area of resistance forming right before it. Now, I would like to see another reaction off the resistance and then a pullback to that supply and then see a move off that supply zone. So again, if the dollar gets really strong, we could expect it to break, but it doesn't mean there's not some money to be made on a move to the downside. It's just one of those times where we want to be aggressive with our profit taking. If you think the dollar is going to rally up, you are in luck. Again, we had a great supply zone right here. This supply zone was called out ahead of time in the daily market breakdown video as well, and we got a beautiful, quick little trade off of that zone. Why quick? Well, Again, we are expecting dollar strength, so this is a supply zone counter trade short. So I was personally just looking for a one-to-one setup on here. I've been testing a new one-to-one system, and I got my one-to-one trade. I looked for more. I tried to bump my stop loss up, and I was just a little bit late. And it's okay. I just locked in my one-to-one, and that's fine. Price shot up anyways, and we expected that because of we were expecting the dollar strength. Now this supply, not only it's a proven supply, which is better. We have a demand zone sitting right below now at 147.05. So this demand is significant. It removed a supply zone that was a proven supply. So it's a good pullback entry long at 147.05. I think it's good enough for just an entry stop and take profit above. In my opinion, it's a pretty good zone, and we definitely could see a move off that demand zone and basically trade to target the liquidity above at 149.73 on the USDJPY. Alrighty, on to the forecast for the GBPUSD. So on the weekly time frame here, we have a weekly demand sitting down below, and supply and demand kind of acts as a magnet, guys. So I think price could easily pull back down to this weekly demand and rally off of it. So we could expect price to rally down. And right now, we are definitely seeing evidence of that taking place. On the daily time frame, we had a daily upward trend line. That trend line was removed, and this demand zone was removed by what? By this area of supply. Beautiful move off of the supply zone so far, and that is why you should like and subscribe to my channel, because this supply zone was called out in last week's weekly forex forecast. So do not miss another forecast. Subscribe and make sure you hit that like button if you are enjoying these videos and you want more accurate analysis like this. So beautiful move off this daily supply for now, and we are potentially going to see a move to the downside to that weekly area of demand. Breaking this low would be very significant because it would give us a daily downward trend line, which is obviously it's stronger than just a supply zone coming into control. And if we break that low, I'm just going to go ahead and mark it out for you guys now. If we break that low again, we will have that, we will have that trend line, something like this. And that's what I'm going to be watching out for, because that will be evidence to suggest price will pull back down to this weekly area of demand, guys. So it's definitely something to consider. Now, something interesting over here, again, this is an older 4-hour zone, but a very, very clear liquidity trap here, in my opinion. So again, I want to see another reaction off this support, but I think it's a good potential dip buying opportunity as well at 1.33. It's definitely pretty decent. But other than that, I'm really not seeing any other zones that we could be trading on the pound. So we got to be a little bit patient and wait for some of those zones to be hit, and then wait for a trend on the 4-hour and the 1-hour chart to continue to day trade long with that trend. Right now, we have no trend on the 4-hour and no trend on the 1-hour, which means we got to be waiting for zones to be hit or waiting for trends to form. Alrighty, on to the forecast for the USDCAD. We have a weekly demand in control and a weekly trend line in control. So it is longs all the way, especially since the weekly demand is in control on the DXY. On the daily chart, however, not the best situation. We're clearly just going sideways here. I really hate trading in a sideways range like this. It's just not my favorite situation, and it's been tricky to trade. I'm not gonna lie. So at this point, it's possible we're kind of creating a liquidity trap down here as well. Some sort of support level forming, and I kind of hope we are, because the reason I hope we are is this. Let me just show you guys. We have a demand zone sitting back here, and again, this is a very, very old zone created in October last year. What I like about the zone is it's inside of the overall weekly zone we were just discussing. So that could be what we are setting up for is a pullback down to that demand and then the big move. It's a little bit tricky to tell right now, so we're going to have to go down to the lower time frames. And on the 4-hour chart, we have just this sideways action is really represented here on this 4-hour time frame. We had a decent move off some zones, but just seeing zones just blown right through. And again, that is due to this sideways market. I absolutely hate trading in a sideways market. It's so low odds from my experience. We still have some time left in this chart, but right now we have a demand zone forming. We still have 44 minutes left before this demand zone closes, and we need this candle to close up here for it to qualify. But if this candle closes like this, by the time you're watching this video, we will have a 4-hour demand zone down below. Not my favorite situation. The only reason I like this zone is because we have our higher time frame demand confluence with it. So we definitely could see a move off of that 4-hour zone. It's more visible over here on the 1-hour time frame though, guys. So if I just do something like this, tighten it up just a bit, it's actually a decent 1-hour zone. I don't love this situation here. I really don't, but it is what it is. If you are bullish the dollar, this is going to represent our dip buying opportunity at 1.367. Now, if we really get a deeper pullback, that's fine. We do have kind of the origin of this entire move of a demand zone down below. So it's also possible we see a bigger retracement down to that zone there on the USDCAD. So a couple good zones there that are pretty decent on the USDCAD. And again, the weekly man's in control, so that's kind of why it's giving us a better option to get in long rather than shorts. Alrighty, on to the forecast for the AUD/USD. There's really All right, on to the forecast for the AUD/USD. There's really not a lot going on this weekly chart. There is a weekly supply sitting above. We've seen many reactions off the supply. That could be where we are heading in the long run. Just wanted to point out this chart. There's really not a lot going on. However, on the daily chart, we have a trend to the upside. So I prefer, and everybody prefers, when we have not only a daily trend but a weekly trend with it. But we can't be picky. It's very hard to get that. So right now we have a daily trend continuing to hold on the Aussie. Again, it could be counter trend to what we could be seeing take place in the dollar. So we have to always monitor the DXY. Right now we are seeing a trend to the upside. Over on the 4-hour chart, you can see we have a pretty good 4-hour demand zone. What I like about this zone is its location. I like when we have a clear, blatant high. Like everyone's gonna open this chart like this, right? And if I ask you where's the high and where's the low, most people are gonna say this is the high and then this is the low, and then maybe these are like our temporary lows right there. Everybody's going to say that. So I like when we have a clear high with the demand zone sitting right below it. I prefer that rather than the high being here and the demand zone sitting right at it. So it does make me feel a little bit more confident in this 4-hour demand zone. I'm not going to get into detail on why that is the case, guys. But look, this zone removed it removed a supply zone and that high, which is significant. But look at this supply zone it removed. Look at the quality of the zones that your zones removed. This trend line was very good, and it's a very clear supply zone. We almost got a reaction off of it again. It ended up blasting through it. But look, it's a very key supply zone that was removed by this demand zone, which is why I think we could definitely see a move off of that demand zone. And again, if you don't feel comfortable with just that entry, stop and take profit. If you're a day trader, look for 15-minute time frame longs in here. I think that's completely fine, completely reasonable to do. But since we have a weekly trend to the upside, this makes that 4-hour zone definitely set and forget worthy, in my opinion. Alrighty, on to the forecast for the USDCHF. So we have a weekly demand in control. However, we have a weekly trend to the downside. So what do we do in these situations? Well, really, it could go either way. If you're trading short, you're trading with the overall higher time frame trend, which is good. If you're trading long, you're trading with the overall higher time frame zone. So it is definitely a tricky time right now. And right now, it is all going to revolve around this 4-hour chart. We have very, very clear price action. We have a demand zone that what came in control back here. This is a zone we called out multiple times now and got multiple reactions off of it. And we have a supply zone in control right now on the 4-hour chart as well. This was a supply zone because it removed a demand zone and an upward trend line. So what do we do in this situation? Again, we are expecting US dollar strength, so we prefer longs. I don't trade at tested zones, so I did not take this trading setup at the zone. So what do we do now? We basically have two options. If you're bearish, you can short at this zone. It is very risky because of the weekly demand and control. So let's say you already shorted at this zone. The trade's already worked out. This was another zone I called out for the members in the daily market breakdown video, but the trade hasn't worked out yet, so I'm not showcasing it yet. But that zone was called out. So if you are short from the zone, at this point, since the weekly demand's in control, the short's fine. But I would definitely have my stop like here or at break even at this point. I still want to give it a little bit of room to breathe, right? We want to make more than just a 0.5%, but I'm just saying that is how I would be managing this position right now because of the weekly demand and control. If there was a weekly supply and control and then we had a 4-hour supply, I'd be letting this trade play out. I would still have my stop loss above it. So that's the difference when you should be more aggressive with trade management. And I will be releasing a video this Tuesday on top-down analysis, basically discussing everything I just talked about. So make sure you guys watch that video. Do not miss it. Very, very important video that I worked pretty hard on as well. So that's our option. We're short from that zone. But again, since we're expecting dollar strength, we prefer longs. But there's no zone down here, so what do? We want to wait for this supply to be taken out, any demand zone there is going to be a good dip buying opportunity, in my opinion, here on the USD Swiss. And that is really all I'm seeing right now. All going to revolve around that 4-hour supply zone on the Swiss. Last but not least, we are on to crude oil. So as far as the daily chart goes, we have a daily demand in control right now. It's very tested, right? We've literally tested it once, pushed out, second time, third time, fourth time. This zone is tested 4 times. We are expecting this zone to break, not only because it's tested 4 times, but because we have a better, higher quality weekly demand sitting down below that I think is more probability we get a big move off of. So that is where I think we could be headed on crude oil. Now, the big question is, will we be breaking these lows first? Right, I'm gonna go ahead and draw the low. Will we be breaking that low first, or pulling up to the supply zone first to get a short trade? I think it's a great supply zone up there. It's 69.37, kind of a resistance area before it. I want to see another reaction off of it to really prove it's a resistance area. That would make it a higher odd situation. But look, that is our supply zone for short trades on oil. Now, let's say we contact that weekly demand and then we push up to this supply zone. It's just going to be lower odds, and we got to be more aggressive with our profit taking. So that's the big question. Are we going to be pulling up to that supply zone first, which is where we can get a short trade, or are we going to be breaking below this low? And if we break below that low, we will have a very, very clear downward trend line here that we could be day trading short on a 15-minute time frame. And our profit margin will be all the way down to that weekly demand that's sitting below at 63.33. So I think it was a very, very straightforward analysis on oil. Again, we're not trading it right now because there's no zones close to price. So we are either waiting for the supply zone to be hit, or we're waiting for a trend to trade with that trend. Profit margin, very, very clear, down to 63.33. If you want access to the full Forex forecast, make sure you subscribe to the Diamond membership, where you get access not only to my daily chart analysis, but also my daily forecast, where I forecast basically like this forecast, but every single day for the members. It also comes with the 38-page PDF, which is your guide for trading as well. Make sure you subscribe, hit that like button, and I'll see you in the next video.